Hello everyone, welcome to Bitcoin Not Crypto. My name is Forrest Stevens, and in today's video, I'm going to be discussing the United States tariffs and how they would affect Bitcoin, good or bad. And before I get into this, I do want to say that regardless, this will just be short-term growing pains if it ends up being bad, or short-term bullish action if it is good. And the thing is about all of that is the worst growing pains you could have is not growing alongside Bitcoin, not having enough of it in your portfolio, in my opinion. That's why I use the Bitcoin Well, which is where I get all of my Bitcoin at the lowest spreads here in Canada. They're also available in the States. They have non-KYC options, and they are not an exchange that holds your Bitcoin for you. You send them your cuckbucks, they send you Bitcoin directly to your wallet. So there's no counterparty risk. They're publicly traded on the Toronto Stock Exchange. Ticker right there on my sleeve. And they are just an amazing platform all around. You can get some free Bitcoin using my code, which is in the description. If you have any questions, you can join my Discord, ask me directly, or book a 15-minute call. I can help you even get set up on Bitcoin Well. And as well, there's a tutorial in the link in the description as well, which will show you how to buy Bitcoin on Bitcoin Well. So Trump is getting inaugurated in January 20th, and he has proposed a lot of different changes to the tax code in the United States. And the idea basically is supplementing some additional taxes or reducing some of the taxes on income tax and increasing tariffs, which is a type of tax on imports. And of course, these are imports that the US citizens are going to use. And I'm not going to get into whether this is good or bad, basically an idea for the citizenry, but I will just talk about how this might affect Bitcoin. Now, all of this, of course, is speculation. None of this is guaranteed. Maybe even these tariffs are just a negotiating tactic. So who knows how many of these will actually come to fruition, and how much of this is just trying to get the upper hand and really asserting the dominance that the US has over the globe because of their massive amount of consumer base. So let's do the pros first, and we'll talk about the cons, the potential cons. So tariffs have the ability to disrupt some of the global trade and currency flows. So basically what I mean by this is that this throws a wrench in the gears of how the trade is currently being conducted. And because of that, it's going to potentially put stress on some of these nations or change some of their dynamics. And it really shines a light as an individual within a different nation that might be subjected to some of these tariffs, that the US has a lot of control over how well you do economically, even as an individual. And this idea of some sort of central dominance over your life will make you kind of be more receptive to a different platform, a different way of conducting business, a different payment rails, and of course a different currency, which is Bitcoin. This is going to be kind of an overarching idea that I think is a big pro, is just that with disruption comes the ability, if nothing changes in your life and everything's okay, you're not going to be looking for alternatives. But if something changes and suddenly something isn't as good for you, and these tariffs, they might be positive. They might end up being positive for some of the citizenry of the United States, but they would have a lot of negative effects on these other nations where these tariffs are imposed. And so for those people, that effect would cause them to maybe look at Bitcoin as an alternative. So there's this interesting thing that happens with US dollars. US dollars are basically what denominate a lot of global trade, and a lot of nations have to hold US dollars because they trade directly with the United States, and they need to be able to buy or transact with US entities. So when they hold these dollars, they want something that's fairly liquid, but they want some sort of return on these dollars that they're holding before they end up using them, because they don't transact with them immediately. They don't get rid of those dollars immediately. What they do is they buy different durations of US Treasury bonds in US dollars and with their US dollars, and then they can either sell those on a very liquid market to access those dollars to use in trade, or they can let those expire and they can sort of set up a type of schedule to have different durations come due, and then they have access to their dollars again and they can use that with trade. So if these trade agreements get disrupted by tariffs, and if these nations get less trade with the US dollars, that means that they need US dollars less, which will decrease the demand for US treasuries. And it will basically, it's not going to free up extra economic money for them to use in other ways, but it will decrease their dependency and use of US treasuries. And there might be an opportunity for them to look for other assets, because they don't need to hold those US dollars anymore. They're probably holding an excess amount of their monetary base in US treasuries, and if they don't need to do that, they'll be looking for other stores of value, and Bitcoin is the black hole that sucks in value from all these other places. It's growing rapidly, and it needs to take money from somewhere. It takes money from gold, it takes money from stocks, it takes money from real estate, and it takes money from bonds. The bond holders right now are the suckers at the table. Their interest rate that they receive from these bonds are negative in real rate based on inflation, and they are just basically holding these bonds because they have to. If they don't have to anymore, because trade tariffs have created such a disruption in the reason that they hold US dollars, then they will look for a better store of value, and historically that has been Bitcoin. Everybody talks about how Bitcoin can't be a store of value because of how volatile it is, and this is just completely incorrect. A store of value does not mean that it stays stable day to day. It means that it stores value over time. It means that over a period of time, it will retain its purchasing power, or hopefully grow in purchasing power. And that is exactly what Bitcoin has historically done and will continue to do because of its limited supply and because of its adoption curve. Another thing that can happen and continues to happen even today is other nations that want to import their goods into the United States, so they want to export their goods, they devalue their currency, which means they inflate it, they add to their monetary base, lowering the exchange price between US dollars and their local currency so that their exports are actually cheaper for the American consumers. So if tariffs get put onto some of these nations that have been inflating their currency higher than the US dollar to stay competitive on the global market and incentivize US entities to invest or to buy from them, this will, if they get a tariff enacted onto them that increases the cost for the American consumer, that makes them less competitive against other nations, especially if those other nations do not have the same tariffs against them. And so this incentivizes the country, the nation, to inflate their currency even more to become competitive again compared to the other nations, even with the additional tariff on them. And this inflation affects the nation's local citizenry really drastically. Like it erodes their savings ability if they save in local currencies. And a lot of these nations already seek, digital dollars or US dollars in general, or some sort of global asset, because they know that their currency is lowering in value because they are able to buy less and less, especially foreign and imported goods, because their currency has devalued compared to those other currencies and other nations that they might import from. So, with increased inflation and increased monetary debasement because of tariffs enacted on these nations, it will force individuals within the country to look for alternatives. And once again, Bitcoin is that global alternative. It's digital, it's permissionless, and it's very easy to get your hands on, even in these other nations, right? There's technology that basically allows people to get Bitcoin easier than it is to get bank accounts. So that's a pretty good news for these nations that are impoverished and basically have bad global trade agreements and all of these problems that basically have kept them downtrodden by and really the other nations, around the world, the more powerful ones like the US, have created these systems in an attempt to get cheap goods, to extract value out of these countries. And as individuals within those countries, you now have an option to opt out of this entire system and to store your value in something that will gain in purchasing power and is globally recognized, which is Bitcoin. The other thing that kind of ties into this is just basically the assertion of the United States with these tariffs really just is such an obvious sign of how important the United States is to the individuals' livelihoods that live in these nations that are going to have these tariffs on them. And that is just such a good example of how centralization is such a weakness. And how if you are dependent on one thing, like so many nations are very dependent on the United States trade and consumerism, that it really makes individuals, again, just realize, okay, centralization is a problem. How do we decentralize? How do we maybe create trade with other countries? And with that, do we still need to use the US dollar? Or could we use something else that isn't centrally controlled, right? All of these nations' currencies are centrally controlled. And the best alternative, again, is a decentralized currency like Bitcoin. So the other thing that just happened today was Donald Trump basically threatened the BRICS agreement that if they created their own currency to trade with and not use the US dollars, they will get really high tariffs. Basically, tariffs are being used as a threat in this case. But he specifically said if they're to create a currency, which is an interesting framing because luckily someone has already created a currency for them and their name was Satoshi. And that is, of course, Bitcoin. And so maybe they can circumnavigate this backlash of the wrath of the United States and the threat of tariffs. They can maybe circumnavigate that by using something that already exists and that the United States is beginning to accept more. And, all of this will just be kind of, we need to see it happen. But it seems like the rhetoric of Trump is that he is accepting of Bitcoin. And maybe he doesn't realize how much of a threat it really is to the US dollar. And I think probably he doesn't. And it really is just a Trojan horse. So if they start accepting it, maybe even just companies that interact with other companies, they will, U.S. companies with foreign companies, even if they have tariffs or something, maybe they'll just interact using Bitcoin instead of US dollars, and maybe that won't be subject to so much backlash as if it was a currency that was centrally controlled by a seemingly sort of antagonistic or a degree of an enemy of the United States. This is very, very much not a national currency. It's a global currency that is not controlled by any one nation. And so maybe that gives some leeway within that sort of situation. Okay, so let's get into some of the negatives. I have some of the negatives that I've come up with here. So there might be some overhead government crackdowns, and I'm talking about like sort of these other nations that are afraid of tariffs. Maybe they'll just generally crack down on anything that they deem threatens the United States, and therefore threatens them by having the potential of tariffs put on them. So maybe they'll just crack down entirely on something like Bitcoin, and they will sort of just make it so that, they're like, oh, we're very US friendly. We'll only use US dollars, of course. Like, we won't use anything else. In fact, everything else is illegal to use, or something along that way. Again, this will just be a negative, in my opinion, in the short term, because the more you kind of squeeze onto Bitcoin as a nation, the more it slips through their hands. The more evident it is that something like Bitcoin is incredibly useful, the more you try to ban it. The more it becomes useful, because if you're stuck within a traditional system, you are subject to the follies and the failures of those systems, and oftentimes that failure is just currency debasement and inflation, and Bitcoin is a solution to that. So if you're stuck in that longer and you start to realize, well, my purchasing power, especially globally, is going down, I really need an out, and they've banned Bitcoin in my country, and I think the reason for that is because it's a real threat to them, and I'm okay being a threat to my nation because I see it as a way for me to survive into the future and to thrive. So it becomes another way of inserting the brainworm, the brain virus. Brainworm just makes me think of RFK now. The virus that is the idea of Bitcoin and how powerful it can be. Another negative on tariffs is that the mining equipment for Bitcoin is very centralized right now. A lot of it is made in China. So if tariffs go up on China, then that limits the United States mining companies' ability to upgrade their fleet or to increase their mining capacity. Again, this negative is just a negative in the short term. I think that we need decentralization along so many different areas, and Bitcoin mining equipment and chip fabrication is definitely one of them. And there has been a bit of a push to diversify where these chips come from. There's been some United States companies that have been working in creating their own mining chips, and I think that is excellent. And in fact, these tariffs, if they happen on, say, China, this will incentivize more decentralization in the manufacturing of Bitcoin mining chips, which long-term is good. Short-term, of course, that would push the price down because the hash rate would not increase at the same rate that it's currently increasing at, potentially. So another thing here is that tariffs are a little bit of a global economic slowdown mechanism, potentially. So it could put a lot of short to medium term, just slowing pressure on economic growth, especially within other nations, is potentially even within the United States. And all the kind of new systems that would have to form, manufacturing nationally as opposed to exporting that concept globally. That's all going to take time to kind of ramp up. So this again is more of a short to medium term problem. And the reason that this could be a negative to Bitcoin's price is that economic, if you have more means economically as an individual, you have more need to find assets that are gonna perform long term, more stores of value. For myself, right, the only reason I really got into Bitcoin was because I needed something to invest in, because I had sold my house and all of a sudden I had all this money in the bank, and I said, well, I know inflation's happening. I can see it at the grocery store. I can see. And I learned more about money inflation, monetary debasement, and I started looking into inflation hedges. I got into different stocks and blah, 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 and eventually into Bitcoin. And now I'm all in. So, this is kind of the trajectory that people go when they have a need for Bitcoin and when they start to realize that this is an asset worth having. That can only happen if they have some sort of savings. Now, there's other reasons and other ways that people get into this, but that is one way that people start allocating to Bitcoin. And so if there's less expendable capital within the individuals because more of it is being tightened up and the economic growth is slowing, then maybe there'll be less money going into Bitcoin. And of course, Bitcoin basically tracks global M2 money supply. So this is pretty relevant, I think. However, I also think that there might be another effect to slowing economic growth within nations, which is quantitative easing, which is, lower interest rates and more debt issuance and buying from the nation's treasury of that debt, and basically more money printing. And money printing is global money supply increasing. So again, this might be a negative short term, and then immediately as quantitative easing becomes noticeable and obvious, and we have the ability to track that, we see Bitcoin reacting to that and increasing in value, as we have seen it time and time again as QE happens. So one other thing here is that with these tariffs, we don't know how much is going on. It creates a little bit of uncertainty in the market, and investor uncertainty will surely lower the price of Bitcoin in the short term. Bitcoin is actively traded 24/7, and people sell what they have. Especially in an uncertainty moment. You can look back at the 2020 crash, basically, where everything went down, and that was just a kind of a liquidity grab. It's just selling what they had and being very uncertain of what's going to happen. So that could also happen. And that could be a negative for Bitcoin, just simply because the price of Bitcoin is a great advertiser for Bitcoin. A lot of people get into it because of number go up, and a lot of attention comes to it because it hits certain numbers priced in fiat. And this, if it goes down or something, this will just bring negative attention to it and less interest. And people will just think, oh, that thing has died again, or, whatever, right? So, the number, as much as it doesn't matter what the price of Bitcoin is in fiat terms, if you have a long-term horizon view of this, it does matter in some ways, because that is what attracts new people into Bitcoin, which increases the value proposition of Bitcoin because it is a network. So as you can see, even with the negatives of this and with the positives as well, it's just really difficult to see what tariffs will actually do to Bitcoin. It's really hard to predict exactly how different nations will act. Some will act differently, and these are all going to be to kind of preserve their nation's interest, but they'll have different strategies to go about it. Some of them will be very pro-US, very, okay, we'll do whatever. Maybe we'll even crack down on anything else. Others will say, you know what, we're going to completely move away from the US-dominated trade system and do something like Bitcoin, which is completely decentralized and allows a lot more freedom. And we see this as a future long-term play. Yes, we'll lose out a little bit to our trade that happens with the United States, but long-term, maybe we can get ahead by adopting this new technology. So it's really hard to predict. It's kind of like up in the air. This is just some things that I've come up with. There's a lot more to talk about on this subject. And of course, none of these tariffs have actually happened yet because Donald Trump is not in office, and we just will see how many and how severe any of these tariffs will be, and how much of this is just negotiation to get more favorable agreements for the United States. So it's all, crystal ball forecasting into the future, and it's all really just our opinions at this point. So those are all my ideas basically about how tariffs could affect, how the US tariffs specifically could affect Bitcoin. If you have any others, comment them in the comment section below. I'd love to hear them, respond to them there, or respond to them in another video. And thank you, Bitcoin Well, again for sponsoring this video. Of course, buy Bitcoin through there and support the channel. And we will see you on another episode of Bitcoin Not Crypto.